Hello everyone. Today we have Mr. Karthik Venkatachalam with us. Karthik has more than a decade of experience and majority of them in cybersecurity domain. Currently, he is associated with a fintech unicorn heading secure by design function of cybersecurity. His area of expertise involves cloud security, container security, API security, IT audits, cybersecurity operations, business process reengineering, and risk management. He also has an MBA degree from IIM Trichy, BTech from Anna University. Karthik is a cybersecurity and technology evangelist, and he loves to talk about various topics in and around cybersecurity. In today's webinar, Karthik will provide us insights on fintech industry and cybersecurity in fintech industry. Please welcome Mr. Karthik.
Thank you, Romita. Thanks for the opportunity. First of all, I would like to thank InstaSafe and also appreciate InstaSafe for coming up with such a good initiative wherein bringing in about cybersecurity awareness to the common people. Looking forward for this particular interaction.
Thank you. So, since you are actually from a fintech industry, so we would like to know the difference between a fintech and traditional banking or financial industry, and how fintech is disrupting the financial markets, and what are the reasons that fintech is growing so exponentially?
That's a very good question indeed. I mean, first, I would like to start a difference between fintech and techfin, right? People have a common misconception that techfin and fintech are same, but there is a minute, thin margin of difference between what is a fintech and techfin. Fintech is application of technology in financial services. Techfin is application of financial techniques on data. So when I say data that is procured by or data that's rather used by technical companies like LinkedIn or be it Google, Facebook, like Twitter, or it can also be data that's used by e-commerce industries like Alibaba or it could be Amazon, right? So that's the common difference between fintech and techfin. Now, fintech encompasses of a new way which kind of changed the way consumers started borrowing money, lending money, spending money, and investing money, right? So, if I have to talk about what are the major sectors that are getting disrupted because of fintech, to name some, or rather, few of the major industry would include your typical payments and remittances, followed by digital lending and new generation commerce, which basically comprises of your point of sale systems embedded with analytics, crowdfunding, spot investments, insurtech, which is nothing but your insurance technology, regtech, which is your regulatory technologies, and then followed by your peer-to-peer lending. So these are some of the subdomains within fintech, which is majorly disrupted. If I have to list some, right now, the other aspect interesting about fintech is how this got evolved. Typically, if you start associating fintech has a deeper roots to the financial crisis and the erosion that's associated with it. For the first time in the generation, new companies, new startups, new fintechs started coming up with a very new breed of products and services, which was more at a lower cost and also with a well-designed platforms like mobile applications or be it web applications. So that's the background. Quickly a trivia. What happened, interesting stuff was in the industry, at a point in time, banks like Wells Fargo, name some Wells Fargo, JPMC, or be a couple of other banks, they started hiring more engineers than bankers. So the situation was totally the other way around. So what happened was, I still remember one instance where 4 or 5 banks put together were hiring around 11,000 engineers when compared to the core IT companies like Facebook, Google, Twitter, which were not hiring so much of engineers. So imagine the pattern, how it's changing, where bankers are not provided the prominence, rather technologies are given the priority because the evolution is such, right? Now, if when we are talking about disruption, right, so we need to elaborate how this disruption is happening, right? Let's, for example, take one subdomain, payments and remittances. Today, you want to commute, you use Ola or Uber. You want to buy some movie tickets, you use Ticketnew or Book My Show. You want to buy a flight ticket, you use ClearTrip or Make My Trip. You want to buy your vegetables and groceries, you use your Swiggy or be it Big Basket. Or sometimes even you use your UPI-enabled payments like PhonePe or Google Pay for paying to your Kirana shop when you don't have physical currencies, right? So if you keenly observe, these are the companies which are involving themselves in their day-to-day activities with the customers, which means the involvement of such companies into the day-to-day transactions of the end consumers is the forced disruption that's happening at a retail segment level, right? Now, this brings us to the next question. How fintech is evolving so exponentially? Deeper analysis goes into my thought where I feel four primary contributors or rather catalysts or reasons why fintech is evolving. The first one being the very primary reason for every business, which is return on investment, right? So heavy influx of funds and return on investment. Fintech seems to be a very growth oriented industry where it has a very healthy return on investment. Now, for instance, let's take an example of a company called InfoEdge Services based out of India. They were one of the earlier investors of an app called Zomato. The moment they invested and the moment they decided to exit from the investment, they got 100x return, which means had they invested 10 rupees during the initial phase, they got a return of 1000 rupees. So such is the growth potential, such is the return of investment. So this in turn made this complete area to be lucrative for potential investors to come up with heavy influx of funds, and this in turn paved way for more growth of fintechs. The first reason. Second reason is most common, the technological evolution, right? So we see a lot of technologies evolving in different sectors rapidly. If I have to name some of them could be your blockchain with distributed ledger, or be it your cloud computing or microprocessor chips, or powerful compact processors which has computing capability to do advanced analytics, right? So these are the backbone for fintech. These are the technologies which paved for the new breed of companies to come and develop a well-designed platform at a lower cost. So the traditional financial institutions which are not adapting themselves to this technology are laid back. Rather, they were not able to compete against fintech. So this being the technology being the driving force for the second factor. The third factor, what we're talking about, is the next gen consumers, the attitude change in the next gen consumers. Of course, internet is bombarded with the millennials versus 1990s kids debate, right? So I still remember my parents used to kind of, stay in queue, had to take much time to go about very few banks that were available at that point in time to get a personal loan or an education loan. The loan processing time was very long. The loan payment structure was very complicated. But now millennials demand a kind of a respect. They want a one-to-one relationship. They want a customized products and services. Now that is the change in the attitude of the consumer. The challenge is here. Now, how this is possible? Because of the technological advancement that's kind of happening, right? Now, today, the complete thing has changed. Bankers were king at that point in time. Now, customers have become a king with this entry of these fintechs. So, what's happening is people started, these kind of people demand a quick return of investment and quick loan processing stuff. So now, what happens? Any bank is behind customers asking them to avail loan. So if they delay the process of loan, or if they kind of complicate the loan payment structure, they are going to lose out on a potential customer. So that's being one of the primary driver where fintechs are scoring much better than the traditional financial institutions, where technology is giving that leverage. The last one being the regulatory changes, right? Today, government has brought in a lot of changes in terms of, digital India movement catching up. People started moving away from physical currencies to digital payment. In fact, since we are talking about the India context, I would rather highlight three of the government initiatives that's in place. Starting off with ONDC, online data marketing, where the end state, what government is envisioning is a flower lady, a lady who's selling flower at the end of the street should also have her online presence, and the entire transaction should be enabled to do a digital payment. This is one such initiative, what they're envisioning. The second one is your JAM program, your Jandal Aadhaar mobile program, followed by your NPCI, National Payment Corporation of India, which is an initiative under the umbrella of which you have your UPI and your Aadhaar enabled payments like BharatPay, PhonePe, and all of those stuff comes into picture. So these are the primary four factors, I think, because of which fintech is evolving exponentially.
Thank you so much.
Yeah.
That was very insightful, and the way you explained, I think our audience can connect very well. So can we move on to the next question?
Sure.
Yeah. So how do you see the kind of cybersecurity challenges that a fintech organization faces. Okay, or and in comparison to a traditional banking sector, and how can fintech companies safeguard themselves against such cyber threats, and what measures do you recommend them to take?
Definitely. I think this is a very important question, or rather a need of the hour question, what I would rather say. I've been speaking about a couple of my thoughts around it in multiple forums. So thanks for bringing that up. First, I would start with the digital transformation of business processes and services. That kind of makes cyber crime a more lucrative one, trade rather, over the traditional forms of criminal activities that has happened so far. Second is the digitalization of banking services. See consumers getting used to receiving updates via phone notifications on their banking transactions and also on their day-to-day activities. Right now, the normalization of information that is being sent and received in this manner has led to a situation where consumer has a perception that all the communication or content what they receive from these business via these kind of digital apps or mobile apps or could be web apps is to be a legitimate one. Yet, the interesting part is cyber criminals are kind of enhancing their skill sets, possible enough to showcase or expose themselves as a Foxpark company and trying to attack the end consumer. Right now, the typical OCBC phishing scam, or be it your crypto.com attack, or some classic examples based on this kind of a scenario. Right. The next interesting part is ransomware, one of the fastest growing form of cyber attacks, right? Its significant revenue potential makes this form of cyber attack more lucrative for more organized threat actors. The attacks themselves are not something new. Interestingly, most of the attacks, people have a common perception that it's something new, but definitely not. 70 to 80% is because of the very common attack vectors like your business email compromise, or be it your phishing, malicious insider, or it could be compromised credentials. These are the common reasons why this kind of ransomware attack happens. So if I have to draw an inference based on this, right? So the interesting observation is the old techniques are gaining more finesse with the help of the adoption of new emerging technologies. Like for example, your artificial intelligence and machine learning is being leveraged to craft authentic looking emails and SMS mimicking user styles, right? Now, having said about the different problems what we have, financial institutions have always fought this uphill battle against cyber attacks, right? Even after putting the right security controls within the company is not sufficient in most cases. The company should be focused on continuously protecting their end consumers from getting compromised. Right now, how can they do that? How can the financial institution go about this? I would rather recommend them to adopt or leverage the new emerging technology. Now, how this is going to be helpful from two different standpoints. One is it will help detect potential attacks in an early stage. Second, it kind of helps in building timely response capabilities of an organization. Right now, if you have to think contrary, we have to think like the threat actors. Threat actors are using technology to make the old techniques more effective. Rather, companies should start focusing on their foundational controls, leveraging the new technology. So, for example, they can enroll for an AI ML based or artificial intelligence or machine learning based business account takeover, wherein like they kind of embed this with an external intelligence monitoring, preventing the company from phishing and or different kind of phishing or whaling, or it could be even spear phishing kind of attacks. So that's a classic example of how technology can be leveraged to focus more on the foundational controls. The second point is the most least explored point, but then I think it's a more effective point. Of late, you've seen for a couple of years, there have been a lot of data breaches that has happened in multiple countries, in multiple industries. In spite of all of this, what is interesting is only 25% of the companies have cyber insurance program. So people think it's going to be a huge cost, but rather what thought I would like to put to the CXOs is they should start thinking about what could be the reputational damage, what could be the financial loss, what a company should be going through in case of an attack vis-a-vis the benefits they're going to draw out of this adopting this kind of a cyber insurance program. So that's something what they should look out for. As everything goes good, it's a fairy tale. but something goes wrong, then really it's going to be more devastating, right? The next aspect is more about the basic foundational controls can also be can be used or rather leveraged to kind of provide additional focus on promoting security focused culture with an effective consumer awareness program. If you take technology and controls, both of them span across multiple functions of an organization. So it's very important that different stakeholders from organization like your cyber team, be it your compliance team or GRC team or your risk team, all of them should come together and have a conversation at the table. They should have a convergent view of the risk and functions, right? How classic example would be a fraud and a cyber security program could have an AI ML based account takeover. Or rather they can have a phishing program or they can have an email security which will help in preventing this kind of phishing attacks, right? Along with the transaction protection. We can have a fraud detection rule which needs to be continuously updated based on the user behavior and demographic analytics, right? So these are a couple of things what we can keep in mind. Now, again, having said that, there have also been instances where there is a proliferation of high sophisticated supply chain attacks, wherein malicious code makes their way into the organization with the use of third-party vendor products. So now this leads to a situation where organizations have to go back and reevaluate on their third-party controls what should be put in place. Organization should do a proper due diligence of whether a vendor is kind of designing, implementing and demonstrating adequate controls, not only in their products, but also in their organization. And then the other aspect, interesting stuff, what I've seen is of late, the adoption of the latest technology is growing huge among the financial institutions. In fact, it has led to a situation where today financial institutions are kind of investing more than cyber defense or any other sector for that matter. An interesting IBM security study says artificial intelligence, security analytics, and encryption could be the three out of the three most mitigating control to reduce the cost of a cyber attack or rather a data breach attempt. Wherein it has helped organization to save between $1.29 million to $1.49 million. So vis-a-vis companies which are not leveraging such tools. So it's high time where people start thinking about investing on this rather than looking at a more of a liability or more of a cost, because it kind of gives a longer benefit over a period of time. The other part is we see a convergence of business continuity and security. Gone are the days where technology was an enabler. Today, technology has become a business by itself. Most of the critical business processes are either associated with the technology or rather technology is replacing them. I see most of the people, giving importance or focus on how can you prevent a cyber attack from happening. But rather, I feel people should be answering or giving more importance on what should an organization be doing when an attack happens. How can I mitigate attack with a minimal impact and also with the effective consumer communication.
Sure.
So that's something which is a need of our. So how can we do that? But this can be done by adopting the security principles into your compliance program, your continuity program. So business continuity and strategy should also take into consideration security risk. Resilience should be adopted or embedded into the design and also implementation of design and operations of your typical systems and processes. People have started growing much. Fintechs where startup have gone to become unicorns. Companies have started gaining more maturity. So at this point in time, they should try to come up with a unified framework of security, privacy, and resilience by design kind of a program which will cover all these adequate aspects. The last but not least, the content part, the content distribution part has also diversified into multiple new channels. So when I say this, what I mean is, say for example, the access is through links, through QR codes. So every firm feels the new channel is the avenue for them to kind of promote their business or provide information about their product and services to the end consumer. But what they fail to keep in mind is these are the channels which are being used by the cyber criminals also to launch their attack. So I would like to close this particular topic with a departing thought that organization should look at all fronts of attacks, should look at all domains of cyber security. Just because one simple cyber attack tactic is not being utilized so far doesn't mean it makes it less possible as a future attempt for criminals to leverage that to launch an attack.
Sure. Thank you so much. I really like the way you explain, everything in details. So I think it's very informative for our audience and
Definitely.
us as well. With this, we move on to our next question. So, what are those few things a startup's founder and CTO, according to you, should strategize during the initial phase of setting up the startup? And what kind of cyber products do you recommend for a fintech to be focusing on?
I think this is a takeaway question rather. So over the last couple of decades, I've seen significance of information security change from being an obscure topic limited to IT folks to an important consideration integrated in the business strategies of companies of all sizes and across all sectors. It's moved on from being an IT topic to a board topic and is a major focus for regulators. For instance, we talked about the payment sector, which is radically transformed, and the same traditional approaches for establishing a trust are not efficient anymore. For instance, instead of the traditional segregated approach, we started looking at creating a unified security, privacy, and resilience by design kind of a program, which is more dynamic to embed the relevant controls at pace, right? So now, being passionate about the greater good, it's important, but at the same time, it's also very important to keep in mind the needs of both the external and internal stakeholders. Understanding the needs of the external stakeholders or clients and baking them into a transformational program is a bit more straightforward. For example, it's easy to see the importance of programs enhancing the security and privacy of a client information and payment transactions. But what may we get overlooked at the most of the time is the needs of the internal stakeholders, which are just important, and we need to make a conscious effort to understand and solve their problems and challenges. So some of the critical cyber products, what they should be looking at would be your web application firewalls, SIEM tools. It's called as security incident event management tools. I'm not a specific product evangelist, but just to name few that comes through my mind for each of the area of cybersecurity product. Under SIEM, it could be typical your QRadar, IBM QRadar or Splunk. Then we have DAM, which is database activity monitoring, which keeps monitoring all the activity that is being done at a database level. There's many tools like Imperva, companies out there doing this kind of a solution. Then you have IAM, identity and access management, centralized identity and access management solutions like Okta, SailPoint, many out there. Then you have deep security products like NIDS, your network intrusion detection system and traffic monitoring. Then you have your cloud VPN, SaaS and proxy solutions like Zscaler. Antivirus, I'm sure everybody would be using even at their personal laptops. Then interesting part would be EDR, endpoint detection response solutions. Symantec is one classic one that's being used most widely. Then you have your SAM, which is session activity monitoring. So this is basically to monitor and record sessions of privileged users, right? And then I call it as a 5 new gen evolved product in cloud security, starting off with CSPM, Cloud Security Posture Management. These solutions are capable of discovering all asserts, detecting unused asserts, enforcing a security baseline, and helping stay compliant with security standards and regulations. Followed by your CWPP, which is your Cloud Workload Protection Platform. So basically, these refers to technology that protects the cloud workloads regardless of their type and also their location. Typically, when I say workloads, workloads includes your virtual machines, containers, Kubernetes, and your serverless workloads like Lambda, right? CWPP finally, I mean, like it kind of focuses more on areas like you have host segmentation, host-based segmentation, system integrity controls, system hardening, and vulnerability management. Then you have CIEM, your cloud identity, or rather cloud infrastructure entitlement management. CIEM is cloud infrastructure entitlement management. These technologies help discover all identities and users, their entitlements, and enforce identity and access governance controls to reduce excessive entitlements and raise size privilege access across multiple cloud architecture or infrastructure. Then you have CASB, which is your cloud access security broker. Interestingly, CASB, when combined with the DLP, will kind of provide a solution, comprehensive solution to look deep insight into what kind of a data goes in and goes out of cloud. And then you have your CNAPP, which is your Cloud Native Application Protection Platform, which is nothing but your CWPP plus your CSPM next gen tools. Then we can look at we talked about data breaches. So probably we have a lot of data leakage prevention tools, which kind of helps or detects the data in use. When any employee in the organization is trying to send any confidential information out to their personal domain or personal email IDs, this kind of help catch those kind of scenarios. Then you have a lot of vulnerability scanning tools like Qualys Guard, Nessus, Nmap. You have your penetration testing tools like Wireshark, Metasploit, Kali Linux suite of tools. Like plenty of tools out there, but then yeah, some of them to name. Then the heartbeat of startups are APIs. So today it's become a API gen where people just want to connect or interface by just plug and play. So APIs become the most sorted of thing, and it's become the heartbeat of entire fintech. So there are a couple of API security tools like you have Valarm, Salt. All these helps in analyzing the traffics, and then you also have API management tools which kind of helps in handling all the entire lifecycle management of APIs like WSO2. Then the crux of all the automation, the CDCI, the continuous development, continuous integration tools like your Jenkins, GitHub, GitLabs, right? The foundation tools for DevOps, or rather I would also put it as DevSecOps, right? So development and security operation automation tools. Your ticketing tools, typically where you track all of your incident tickets and stuff like your ServiceNow, or it could also be like your project management tools like Jira or Atlassian suite of products like Confluence. So these are some of them what I could name, at least what organizations can look up at being a startup. I would not say all of these are comprehensive, but this kind of eliminates much of a risk. And this could be I would say more of a 360-degree coverage across multiple domains of security.
Thank you. So, with this, let's move on to the next question.
Yeah.
How can security embed into the software life cycle of the product? Because you named a lot of products that we can use, right? So that brings me to this next question.
Yeah, I mean, I think I could also see a logical coherence, an extension of the previous question. So yeah, when we make products or processes easier for teams to consume, the benefits are exponential, right? For instance, implementing solution supporting a more robust secure by design program to ensure security controls are considered and implemented much earlier in the system development process is one classic example. If I have to talk about previously how the entire SDLC lifecycle it was a typical waterfall kind of an approach, a lifecycle model, SDLC model, what they call it as. So they typically start off with a requirement and then they move on to a design phase. From design phase, they get into coding, and coding, then they build into an executable code. They do their system integration testing and user acceptance testing. And finally, they launch the product. And before launching the product is the phase where security gets involved. Now, security kind of comes up with a list of vulnerabilities and findings. And then these guys, developers will come back and say, hey, if you have told us earlier, we would have spent time to fix all this. Now we cannot go. This is a last moment rush. Now, in this typical scenario, organization can only do two things. One is either they accept the fact that there is vulnerability, but they don't want to go back on the external commitment given. So they go ahead with the loopholes all identified by the security. So which means they go ahead with the security vulnerabilities. Mm-hmm. The other choice is they say, no, I cannot take risk. Let me go back and rework on all of this. Let me postpone my go live date of the product. Now, this will kind of create a reputational damage on the organization, right? Because which means they are not able to deliver the product on time. So these are the two dead ends where typically involving security at the last leg of product development lifecycle leads to. Now, how Secure by Design is helping this? If you take Secure by Design, right? Secure by Design kind of an approach covers all the areas of cyber security like your identity access management, data protection, network security, cryptography, BCP and DR, application security, all these domains are covered. So it's like you kind of involve a security person. The security person provides his thought from the initial stage, from a regulatory standpoint, from a security standpoint, from a compliance requirement standpoint. So what happens is organization gets the complete requirement not only from business but also from security. So now take time to plan. Okay, if the normal business development takes 2 weeks, I need additional 1 week for me to work on all the security recommendations. So they will go back and say, I will keep 1 week as a buffer. So I will take at least 1 month to deliver the product. Now they will have enough time to embed security. All the vulnerabilities are identified at the initial phase. So they don't have to go back on their commitment, nor do they have to compromise on the security and then rather deliver on the product, right? So what happens? This kind of, now if you analyze this situation, this secure by design is kind of a shift left approach that reduces the cost of the security control. It helps faster go-to-market deployments, as it is much easier to fix issues during the early stages of system development, right? Now, the other aspect is combining automation with it. So when I say automation, there are plenty of automations out there like compliance as a code or an automated security patterns that define easily consumable security requirements that can further streamline this particular secure by design approach and can reduce the friction. So this is how now security is getting involved from the initial requirement stage, and this helps us reduce cost, time, effort, and also reach market faster.
Thank you. That was very relatable since we are also from the cybersecurity industry. Yeah. So with this, I would like to ask you, there's a huge rise in the fintech industry, right? So there's been a significant adoption of financial technology across all age groups.
Correct.
So we have seen the UPI transactions, as you spoke in your first answer, right? Volume, peaking every year, right? Now, like you said, roadside selling vendor also uses a Paytm. So no banking apps are on the rise, right? So at the same time, there are huge concerns of cybercrime and cybersecurity as well. So which are related to this kind of application. So what is your viewpoint on this? How do you think individuals can secure themselves from this?
Still now we were talking about how can we kind of help organization prevent cyber attacks? How can they stay abreast with technology? But now we have come to the other angle of the common people, the layman who's getting associated with these kind of technologies, right? So from a customer standpoint, couple of common things what I like to share, which most of them are aware of, but still people are failing to incorporate is limit sharing your personal information online. Change the privacy settings and do not use location features. Basically, this gets added by default. Keep software applications and all your operating systems up to date. Keep patching it. The most fundamental stuff of creating a strong passwords using upper lowercase numbers and special characters, using a password manager and two-factor authentication. Sometimes what happens is wherever chance is available, we can try to use fingerprint-based access or biometric-based access, or it could be a retina-based access or a facial recognition or a two-factor authentication rather than entering the user ID and password manually. This is something what they should be thinking of. Should not share their pins and passwords. Use devices wherever possible. Check the account statements and the client reports, as credit reports regularly, right? And also you should try to use your basic fundamental tools like your antivirus and more of your anti-malware solutions, right? Back up your file regularly, encrypt it, and also ensure wherever it's getting stored as an access restriction. Especially when you receive an email from an unknown sender, please do not click on any link or provide any information requested by the users. What they try to do is these scammers create a kind of an urgency, especially if I have to see, during the lockdown time, these guys started saying like, hey, there's a plenty of work from home opportunity, you can earn a lot. Now, the inquisitiveness to know about the opportunity to earn more, people start clicking on the link without even looking the email ID. I think most of the phishing attempts happens 50% because people do not look at the email ID from whom the source of origin of the email sender. And extension of it, something what we have seen is recently you would have heard news about government enforcement directorates blocking a lot of Chinese local apps. So what's happening is I talked about one of the area called crowd investment and peer-to-peer lending. So now what's happening is people are creating digital platforms, microfinance companies. These microfinance companies are coming up with applications where a common man can be associated two ways. One is as a borrower, the other one is as a lender. So I'll first start the journey with the borrower. So what happens typically when someone tries to is in need of a money, he's not able to collect the money what he wants from the list of relatives or his friends circle. Immediately he needs money, but he feels that within 2 months he can pay it back. Right now, what he does is that's where these companies come in picture. So they have their own agents who go and approach these people and say, hey, we give you money so quickly. All that you have to give us few documents, fill this up, and you can repay whenever you want. These people just go by the words. They provide all the Aadhaar documents, everything to them. And then finally, these agents create user login and all this use case for these borrowers and they get the money. Now, this is more from a borrower. So the platform which is launching this app will have all the personal identifiable information, the account information. In fact, they even after launching the app, everybody has a smartphone. The app allows you to install only when you say okay for the app to collect all the details from your phone. So basically, they are collecting what are the different applications you are using in your mobile phone, and then what are the text messages what you are sending and receiving. For example, if your account is integrated with a mobile number, you withdraw money or you kind of do a payment, you get an SMS message that reaches them also. So it's like they are stalkers, they are online stalkers of every transaction that goes via your phone. Now, this is on one side. So with this, these people understand what is the monthly income, which geographical location they are, what's their capability of repaying the loan, and they kind of come up with a risk score. Now, the other people who have money and they feel if I invest in a banking, if I invest with say common banks or with any of the private banks, I would get say roughly 6 to 6.5% of interest annually. Now, what these people do is they attract these lenders saying you invest within 8 months we give you 15% of this income. Now, so the quick money to make quick money out of that interest, what they do is they go there, they just create an account and then they associate their account with this particular app. They look at multiple cases of the borrowers and then they choose 3 or 4 borrowers whom they feel they can lend money. Now they give money, they are safe. Now the important aspect what's happening is these apps, as long as they were sweet until the money was given to the borrowers, start showing the other face where they become more aggressive. They get into physical and mental harassment for the common people. There were a lot of suicide cases that has happened because of these kind of scenarios. Now to the lenders, and that too, these kind of harassment as techniques were used only for the people who were just missing one single repayment cycle, which means 1 month they were not able to pay their EMI. Then these people started cornering them all means. For a lender, it was a very good platform where, because with so much of different techniques adopted on the common people, they collected the money back and these people started getting interest. Right? Now, what I wanted to know, what rather I wanted to communicate to the common people is, first, as a borrower, try avoid approaching these kind of microfinances just because they are giving money quickly. Because there are a lot of hidden charges, there are a lot of hidden aspects associated with it. And that's the only reason why government kind of blocked all these particular applications and firms. The second reason being, as a lender, it's good that we have to make money, we have to do it in the right way, but I think this is not an ethical way of investing money. So people should also look about the modus operandi of such kind of an microfinance companies or the applications before they invest on money. Earning money is important, but not at the cost of harassing common people. So that's something what I also want people to know, playing dual hat of both lenders as well as borrowers.
Thank you so much, Karthik. I think Karthik had a message for everyone, for a new company who's setting up their cybersecurity, for a company who's repurchasing their cybersecurity products, and for common people like us who are still getting educated about cybersecurity. So Karthik has, really explained in detail. So kindly watch our video, and do follow the steps that Karthik is recommending each one of us. So thank you very much, Karthik. It was a very lovely webinar and good to have you with us.
Pleasure is mine. Thanks a lot for the opportunity.